Hello everyone and welcome to our lecture series on financial accounting or principles of accounting, and I'm your instructor Jamal Haider. So today we are starting our chapter 7, which is plant assets, natural resources and intangible assets. So our first learning objective is measure and account for the cost of plant assets. Plant assets basically they are long-lived assets or fixed assets, and how they are recorded on a balance sheet. They are known as land, building machinery equipment, furniture and fixtures, land improvement. Remember, this is not land, this is land improvement. So this is different. For example, you bought a land and you fence it. When you fence it, right? So that improvement is called land improvement, and that is depreciated sorry depreciation expense goes to, or it's yearly basis, or how much you consume it, that becomes your expense and that go to income statement, right? And another long lived asset, which is natural resources. For example, you own a water well, water reservoir, or copper mine, steel, or salt, mine, or the oil well. So all these kind of stuff is called natural resources. So whatever you extracted from the earth, so the left or remaining is the natural resources, and the amount that you extracted, that become your depletion. Remember, this is different than depreciation, right? So what is this depletion amount? The amount of depletion is basically the cost of goods sold. For example, you extracted 10 ton of copper from copper mine, right? And you sold it for 15. The 10 ton, digging the copper, it cost you 10 million, and sale price is 15 million. How much is the depletion? Depletion is the cost of goods sold, which is 10 million, right? And then there are the third category, which is intangibles. And how we call this intangible long-lived asset, which we cannot touch, right? So like goodwill, right? Goodwill, sorry about my writing. And then we have patents, right? Their life is more than 1 year, right? Copyrights. So there are many other, like intellectual property, something, right? So every, for you purchase, for example, 10 year, so every year, you reduce its value, and we call that amortization, right? So all those related to income statement expenses. So let's explore all these further. Okay, so the working rule of measuring the cost of the plant is that the cost of any asset is the sum of all costs. Remember, these three words, all the costs incurred to bring the asset to its intended use. So if you bought a plant, or you bought a fixture, that you just bought it, and you also call some guy who install it, so the installation price or its wages are also included in the cost of the plant. So let's talk about the categories which you can include in the cost. Number one, purchase price, taxes, commission, and other amount paid to make the asset ready to use. Remember, ready to use, which means before it actually start operating professionally or officially, before all the cost, they are included in the cost of plant assets. So let's talk about one by one. Land, what is the cost of the land? So the purchase price, any commission you paid, service fees, legal fees, sorry, surveys fees. You ask people to survey about, where should be, buy the land. So they, according to your requirements, they find out the location, they charge you some fees, we call this survey fees. And also the property taxes, back property taxes, right? that the purchaser pays, not the buyer, not the seller. Okay, purchaser pays. Normally back taxes normally paid by purchaser. And any kind of expenditure for grading or cleaning or for removing unwanted building. Remember, these are not land improvements, right? You're not improving it, right? So you like grading, clearing or removing unwanted buildings on, that is also included in the cost of land. So we have illustration here. I just want you to pause the video and try to solve by yourself, and at the end match the answer. Here we go. Right, so only one thing that would cause you a little bit confusion is 260,000 to pave the parking lot, right? So is this the cost of land? Answer is no. Why? Because these are called land improvements. So total cost of land would be addition of all these 300,000, 10,000, 8,000, 5,000 and 1,000. Answer is 320, right? And then how we gonna make the entry? Entry is the same. You purchase the land, right? According to 2, you purchase the land against notes payable, and all the the taxes, FedEx pays, or this 24,000 extra above on the top of this 300,000 you pay through cash. So your land cost is 24,000 against you create liability increase mean credit 300,000 and you pay cash 24,000, right? So land to notes payable and cash, right? Good. And then building cost. So buildings can be acquired through 2 ways. One is you construct it, one is you directly purchase it. So when you construct it, the architectural fees, approving the architecture, the map or something, building permits, contractor charges, payment for raw material, labor and overhead, and also the interest on the money borrowed specifically for the construction. If a firm applied for a loan like $1 million, and among this $1 million, 500,000 is for building construction, right? So this 500,000 interest on this one is also added to the cost of the building, right? Okay, what if you acquire the building through cash, or you purchase a building, you do not construct the building, then purchase price, commission, sale taxes or other taxes that you paid, and also the expenditure to repair, renovate the building as well included in the cost of the building. And then cost of the equipment and machinery, it would be any discount that you got, you less from the purchase price, and then transportation, insurance, sales commission, purchasing commission, installation cost, and testing cost, any expenditure to test the assets, and also the cost of any special platforms, anything that you require before officially running of this machinery or equipment, any special arrangement also included in the cost. And then we have land improvements and the leasehold improvement as well. Okay, so what is the cost of land improvement, which includes driveway, signs, fencing, sprinkler systems, and these costs are subject to decay and should be therefore be depreciated. For example, at the passage of time, they lose their original value because you use them, right? So we call this depreciation. We will also learn its official definition of depreciation, which is the use of the asset according to the life of the asset. And what is the lease improvements? For example, you install something on your land as a lease, right? So we call this leasehold improvement. They are also depreciated or amortized over lease term. For example, you fence your land through a company and they provide their own special, security systems or fencing or metal detector kind of stuff for you for 5 years. Right after 5 years, they're going to take back their fencing, security cameras, and all the stuff. So the 5-year cost, you divide it into a yearly basis. So you basically depreciate it or amortize it, right? So let's talk about that.